Been focused on my check.
Yeah, it's your boy Crypto Blood, and welcome to part 3 of the exclusive interview with SEC Commissioner Hester Peirce. I've been saying Peirce for the last 2 days and was corrected yesterday on that pronunciation of her last name. So I hope you guys enjoy it. Shout out to my man Todd Mahar again for the footage and the interview. They talk about blockchain and regulation and how the SEC will play a part in that going forward. So I hope you guys enjoy this. Make sure you guys like, share, and subscribe. And I'm out of here, people. Holla.
Or to do something that violates our securities rules, we will pursue that. But we have to be careful in how we go about that, and then also how we explain it so that we're not chilling activity that we really want to have happen.
Got one working.
Right.
Thanks for that. That's definitely something to think about. And when we think about, the transfer of value between one party and another, we often think about the idea of a free market to where we want open participation amongst the most people as possible without any kind of environment of financial disparity. For example, the accredited investor status that is being attached to ICOs right now. Just about any financial advisor will tell you, if you're around my age, I'm not going to disclose that, that if you're in my age range, you should have 10 to 15% of your assets. Well, I'm not going to say 10 to 15% because you could just look it up. But between 10 to 20% of your assets in high risk, high reward assets for your portfolio. There's a certain asset class that I can't participate in because I don't have $1 million liquid or make $200,000 to $300,000 a year. I am not an accredited investor. So me and probably about 75 to 90% of the United States capital that's in the lower to middle class is not able to participate in offerings. What they have to do, essentially, is they have to wait for big institutional buyers, richer folks who are accredited investors, to buy it up, dump it at the market at a profit, and have lower to middle class individuals pick it up at a premium. What's your opinion on labeling ICOs that are not necessarily deemed a security, or maybe they are, and the limitations that are put on lower to middle class people who are not accredited investors?
I think it helps to maybe talk a little more generally about the accredited investor standards. So we have private markets and we have public markets. So if a company goes public, it's freely tradable. Anyone can buy it. But the private markets have fences around them. And an important fence is the accredited investor fence. So it says, look, we think this market is only for folks who are sophisticated. In the public markets, we have so many rules and regulations about what must be disclosed and what kind of information needs to be out there, how often you have to update that information. And so we think that retail investors are protected in this space, that your average investor is protected in this space. The private markets, we say, okay, you've got to be institutional, or if you're an individual, you've got to be sophisticated. So how do we decide whether you're sophisticated? Well, the decision that was made is, we'll just look at how much money you've got, either how much income you earn or how much wealth you have. And that's a good proxy for sophistication, because even if you yourself, there are a lot of entertainers we might think of who we think, maybe they're not that financially sophisticated, but they might be able to hire someone who is to sort of stand in and make decisions for them. And if they do lose money, we figure, all right, they can probably afford to lose some money. So that's kind of the decision that we made when those parameters were put in place. But what a lot of people have been saying lately is, wait a minute, surely there are other ways to tell whether someone's sophisticated. Surely you're not telling me that someone has to be rich in order to get rich and to participate in this whole segment of the market. Because I think, as Todd alluded to, I'm not sure I would put it exactly the way you put it, but I think it is true that you see lots of companies now waiting a lot longer before they go public. And so you see a lot of the growth is happening well before companies are public and available to everyone else. And so how do we find a way to get people involved earlier in the process. And so people are saying, let's look at other measures of sophistication. Maybe if someone gave me this example the other day, and I thought it was a nice one. Say you've got a chemistry teacher in high school. Okay, probably not making a ton of money, but may very well be able to assess whether a chemical company trying to raise money is a good investment or not. That person may very well be more sophisticated than Paris Hilton in assessing whether that chemical company is a good investment. So are there ways that we can sort of look and encompass other types of sophistication? And so I think that is a direction that a lot of people support going in. Personally, I don't like the accredited investor standard at all. I think you should be able to opt in or out of the private markets. If you are willing to forego the protection that you get in the public markets, then you should be able to participate in the private markets. But that's just not the choice that we've made as a society, to allow people to have the same kind of freedom to buy whatever security they want that they have to go buy a lottery ticket or to buy an expensive fancy purse that doesn't have much value. To many people, doesn't have much value, but you can go spend lots of money on that, and we're not going to stop you. So it's an odd choice we've made, but we have made that choice as a society.
Yeah, it almost seems like the European Union, having that opt-in process that you're talking about, has more economic freedom than the current U.S. markets due to this accredited investor status. Personally, I think a CPA would do a better job than, as you said, Paris Hilton. Can Paris Hilton hire someone? Yeah, but the CPA could probably either be the person that she's hiring or hire someone themselves as well.
And I'm not trying to pick on Paris Hilton. She may very well be quite sophisticated. But.
Yeah, apologies, Paris.
I've got a question that's just sort of the opposite side of the accredited investor situation, and that is from an investigative standpoint.
Do you want the mic? Here, I'll bring you the mic.
I have found that many times unscrupulous securities providers will hide behind the accredited investor shield, for lack of the other things, to avoid disclosures. From your experience, do you see abuse of that rather rampant or not?
Well, I think you raise a really interesting point, and one, there is this notion that some people think, okay, if the SEC isn't telling someone to disclose something, then the person raising money is just not going to say anything. Well, I think what we actually see often is that the investors who are potentially going to invest in these projects say, I need information. If you don't give me information and the information I want, I'm not going to invest in you. When someone is in the situation of saying, no, I'm not providing you information, you better start asking a lot of questions. And this is my advice to people. I don't give financial advice, but the one piece of financial advice I do feel comfortable giving is ask a lot of questions. If you don't understand what someone's doing with your money, don't give them your money. So interestingly, Madoff was someone who was able to develop this mystique around what he was doing. And so I talked to some people who had actually not invested with Madoff. And one of the things they said to me is, yeah, they would go and they would ask him some questions that they would routinely ask of any private fund they were investing in. And he wouldn't answer the questions. And so for them, that was a huge red flag. Run the other way. Don't put any money in. So that, I think, is, a sign of quality is that you're willing to be somewhat transparent about what you're actually doing. Now, sometimes the SEC's rules actually stand in the way of hedge funds and other private funds being as transparent as they might like to be, being as open about what they're doing. But I think in general, we're seeing really sophisticated actors in the hedge fund and private equity space saying, we need information. Now, again, that's not to say that there aren't bad things happening, and I think you're pointing out some bad things, and that's why I think we need to just keep hammering home, ask questions, ask questions, ask questions, and don't assume that you're the stupid one when the person refuses to answer your questions. Assume that they might very well be doing something that's not good with your money if you give it to them. One thing that I've noticed in the crypto world in the short time that I've been following it is, you saw a lot of people willing to throw money into any project that had crypto attached to it. And now you see people saying, wait a minute, I gave money based on this white paper, and then it turns out that the white paper is not consistent with the code on GitHub. So what's going on here? And so I think there's a lot more questioning going on in this space, and I think that's really healthy. You want to get people asking questions. You want to make sure that people aren't just saying one thing and then running off with the money. And so I think it's always wise to kind of ask a lot of questions about who you're dealing with and make sure you're comfortable. I think that's what all of you are about in your profession, is figuring that out. And so I think that's really important. It does sort of speak to the point, too, that sometimes as the government, we think if we don't put this mandate out that you ask questions about your customers, you're not going to ask any questions. And I just think for reputational and other reasons, that's not actually true.
Yeah, and a lot of banks do have pretty good policies written into that because they take that risk comparison. So you don't necessarily have to have that top-down approach, but companies are doing it anyways. I think that was just about all the questions that I had. Was there anything else that the SEC is involved in that we didn't cover?
Well, we're involved in a lot of other things, but I don't know how interesting they would be to you. So if anyone has any questions, I'd love to hear from you now. Questions, comments yet? Well, again, so the question was, how does the SEC feel about investing in marijuana-related businesses? How the SEC feels about that, to me, is in many ways irrelevant. And this goes to a point that I made earlier, which is that the SEC is not a merit regulator. Some state securities regulators actually are merit regulators. That's in their statutory framework. And so they are trying to stand in for their investors in their states and make decisions about what might or might not be good for them. The SEC takes a much more agnostic approach and says, all right, and believe me, there's a lot of money going into marijuana-related businesses now, and I do come across those businesses at various parts of my job. Sometimes in the enforcement context, because sometimes they're not being fully, they're not disclosing fully to investors what they're actually raising money to do. But the point is that if you want to run a marijuana-related business and you want to raise money in our securities markets, you've got to tell people the material information they need to know, and that's where we stand in to see whether you're doing that, to make sure that you're not engaged in some kind of fraud. Now, one of the risk factors that you might have to disclose as a marijuana business would be potential legal implications of your business, given the uncertainties around state and federal different approaches to marijuana regulation and prohibitions, et cetera. So that might come up, but it would only be in the context of, are you disclosing it properly to potential investors?
At the beginning of your presentation, you talked about how a lot of people in the room here are related or work for a bank. And so a broker-dealer is kind of that secondary thought. Having worked at a bank and a broker-dealer, or a bank broker-dealer, I've seen both sides of it. The biggest risk in my mind on the broker-dealer side right now are around penny stocks. Both the SEC and FINRA are very active in that space. Do you have any suggestions or best practices for those who work at a bank who have a broker-dealer on how they can address that risk?
Yeah, I actually should have mentioned that on my own, so I'm glad you raised that question. That is an area where we're seeing a lot of attention focused because, so the penny stock space is one in which there is a lot of misconduct. There are a lot of people who are trying to make a lot of money really fast in this space, and it's remarkable how much energy and time they're putting in, but a lot of people have made a lot of money doing really bad things in this space. And so one of the things that we ask broker-dealers to do is to pay attention to the space as a potential source of misconduct and to file SARs as necessary to report potential misconduct. So this is one of the areas about which I've said to our staff, I think we need to do a better job in telling people what some of the red flags are they can look for, because this space is not, you can't just say the whole space is bad, and so you got to file a SAR every time you see a penny stock transaction. But at the same time, I think what we're expecting people to do now is to sort of glean from our enforcement actions and what FINRA has done in the space and try to figure out what the red flags are. But I'm really, and there is some good guidance out from FINRA, but I'm really pushing to say, let's put out a list of red flags that makes it easier for people to kind of know what they're supposed to be looking for. So the best advice I can tell you now is you probably should be aware of the enforcement actions that we've brought in the recent last couple of years, because that kind of does reflect some of the red flags, but it's more work for you to go through and read the orders and see what those red flags are. And often in hindsight, it looks very easy to say, oh yeah, clearly those were red flags, but it may not be as easy at the time. And so again, it's an area where I think we need to be careful. I've argued against penalizing AML compliance officers who are making good faith determinations at the time about what they're doing. We can't go back with hindsight and say, oh, but we now know that this was a fraudulent transaction and you should have seen it on the front end. We need to do a better job providing guidance. We need to make sure that we send the messages to firms that the responsibility belongs to the firm, to the broker-dealer, not to the individual compliance officer. Often we see under-resourcing of compliance officers in this space.
And that concludes the 3-part series with Todd Mahar and Hester Peirce. Hope you guys enjoyed that. Make sure you like, share, and subscribe. And let's have a conversation about this. Do you think the SEC is even going to be able to fully regulate this new burgeoning technology we call blockchain? We shall see. Until then, have a great weekend. I'll talk to you guys later. Holla! Both commercial units.